What is going on, everybody? This is S Trades, and this is day 9 of the bootcamp. And in this video, we're going to be going over time in trading. This should be a very simple and fast lesson. It shouldn't take too much time. Um, Now, the previous videos that we were doing, they were pretty long. They're like 30, 40 minutes or whatever, however long they were. But it's because those concepts really need to be discussed in depth. So this one should be pretty calm. So let's get straight into the video. So what is time in trading, right? It's very important for you to identify a trading session that you're going to be trading at. Uh, it's not that you're just going to be placing random trades throughout whenever you feel like it. No, like it has to be a specific time that you trade at, right? Because every session, as you guys could see on the screen, they have their own time and they have their own way how the market moves, right? Certain session has lower volatility compared to the other sessions. So before I get into these sessions, everything that I'm going to be talking about is going to be in Eastern Standard Time, okay? EST, everything is New York time, all right? I trade futures, right? I trade NASDAQ and the S&P, so all of this is going to be pertaining into futures, right? Because I know Forex has a little bit of different timing. It's not that drastic, but Forex might has like its own different kill zones or whatever you guys want to call it. It's like specific times where the market's volatility is like very high and a lot of volumes present in the market. So this is only for futures. Okay, what are the sessions, right? So we got Asia session, right? Asia sessions pretty much opens at 6 p.m. and goes all the way to midnight, which is 12 a.m., right? Some people, say that Asia is from 7, but doesn't really, like, it's not an hour difference. It's not going to really change much. So it's Asia usually opens up at 6 and then it goes up until 12. And also another thing is a lot of these sessions are going to be overlapping with each other, right? So the times when they overlap is when you usually have a lot of volatility and things like that. But for the purpose of this video, I have them all separately just so you can understand what time is each session at, right? So like I said, Asia session is 6 p.m. to 12 a.m. London session is from 12 a.m. to usually 6 a.m., right? And New York session is around from 8 a.m. to 4 p.m. So I split New York session into two. I split it into AM and PM, right? I trade the AM and the PM, but usually for the most part, AM is what you're going to be trading because this is where most of the volatility is. This is where most of the big traders, the institutions, bank and firms, and all of them are present, and a lot of volume is in the market, right? So New York AM is typically from 9:30 to 11 a.m., right? This is where most of the volatility, most of the volumes are going to be at, right? And then New York PM is anywhere from 1 to 4 p.m., right? Now these aren't kill zone, right? So what are kill zones, right? An ICT concept, kill zone is pretty much, again, in the market there's most of the volume present, right? It's so the time that I have here, these aren't kill zones, right? These aren't the times where the most volume is at, right? These are just the session timing, like when they open, when they close, and things like that. So for Asia session, it's usually anywhere from 8 p.m. to 12 a.m. For London sessions, anywhere from 2 a.m. to 5 a.m. For New York AM is anywhere from 9:30 to 11, and New York PM is anywhere from 1 to 3 o'clock. Okay, so now what does that mean, right? This is just pretty much the total, like the entire time frame of where the sessions are at, and kill zone is usually where the most of the volume is at, right? So if you're trading like AM session just like me, right, I'm not really trading pre-market, right? And I only take trades for anywhere from 9:30 to 11:30 because that's where my strategy works, right? And then I hop off for a little break because it's a lunch break. You won't really get much moves. And let's say if I didn't really, let's say AM was choppy and we didn't really get much opportunities, then I would hop back on and look at New York PM, which is around from 1 p.m. And at the very most, I would go up until like 3 p.m. Sometimes, very rarely, I would be looking at like trades past 3 p.m. because it's like market's about to close and I don't really trade during that time. So my, like, again, specific suggestions, for example, for strategies that I'm using and a lot of other strategies too, is to look at the market anywhere from 9:30 a.m. to 11 a.m. and then from 1 p.m. to 3 p.m. That's usually where you get most of the strategies happening and working. And just a quick note again, whenever the market closes and whenever the market closes, that's where most of the volatility in the market is at. So 9:30, right, you'll get most of the volatility because the market, that bell that you hear opens up and then boom, a lot of traders are active in the market and you're going to see like big spikes in the market, right? And same thing when the market closes around 4 p.m. you're going to see lots of volatility again to pick back up, and then markets closing, right? So those are the two time frames to pay attention because it gets very, very, very hectic sometimes. Like I don't usually take trades right at 9:30 open because a lot of the times it's super volatile, super crazy. I usually wait a little bit to kind of see what price is doing, right? And another thing that you have to note is the news, right? Whenever the news drop, but that's going to be part of another video, because kind of got to go a little bit more in depth for news. But a lot of the times for New York news, you're going to have news happening at 8 a.m., 8:30 a.m., 10 a.m., and 2 p.m. That's usually where most of the news are happening, but you still have other time that news happen, but that's going to be another video. So for me, again, like I said, and I'm suggesting this for not just the beginners, but for literally every trader, right? Just focus on 9:30 to 11 and 1 to 3. That's it. Do not trade Asia, don't trade London unless you're really like you can't trade AM or PM. Then sure, you gotta do what you gotta do. Now, these are very important, right? You guys got to understand that you have to master one session, right? You can't be trading Asia, you can't be trading London, New York PM, New York AM all at the same time, because you're going to be all over the place. You're not going to have any consistency. You're not going to have any results that are pretty much consistent. Each session has its own parameters, and each session has its own, like, the way it moves is different, right? So, for example, Asia session, which is 6 p.m. to 12 a.m., is usually choppy for most of the time, right? Asia session is pretty much not going anywhere, right? We're just kind of going up, down, up, down, up, down in a very small range. We're kind of just consolidating. Same thing with London. London usually kind of picks up the volatility a little bit. It kind of starts making the highs and the low of the days and stuff like that. And then the New York session, right? This is where most of the volatility picks up, and this is where you see all these big candles start to pop up left and right? Now, the reason why I included AAM is because a lot of the times news in the markets are going to be present at 8 a.m. and 8:30 a.m. So this is also very significant. But New York Stock Exchange opens at 9:30, right? This is when you hear that bell. This is where most of the volatility is going to kick in the market, right? 9:30 a.m. This is when the New York Stock Exchange opens at Eastern Standard Time, right? And it closes at 4, right? But for futures, we're pretty much open for, you could almost say 24/7, right? They have like an hour maintenance break or whatever. So anyways, like I said earlier, you guys have to pick one session. You can't be trading every single session. You're not going to be consistent. You're not going to be finding any consistency for the long term, right? So let's say, for example, me and most of the traders are going to be watching this video. You guys are going to be trading New York AM, right? New York AM is where most of the volatility is, where the most of the volume is at, right? This is where you get the most pure, clean price action, right? But it doesn't mean that it's always 100% guaranteed, right? Sometimes you're going to have better price action in New York PM, right? So it's usually anywhere from New York AM to New York PM is when I trade, right? So from anywhere from 9:30 to 11 a.m. and then starting from 1 till the market closes, right? And another thing is that there's obviously lunchtime, which is 12 p.m. And obviously, as it sounds, it's when everyone goes and takes lunch break. So usually, for the most part, lunch is going to be pretty choppy. You're not going to be really doing much, right? Now, everything that I say is not 100% guaranteed, okay? It doesn't mean just because I said lunch session, which is 12 p.m. is going to be choppy. It doesn't mean that it's always going to be choppy. Sometimes it's going to be going up. Sometimes it's going to be going down a lot, right? So same thing with Asia session, right? Most of the time, Asia session is choppy, right? But as you guys might have seen for the past few weeks, right, with these all crazy tariff news and stuff like that, Asia session has been cooking like thousands and thousands of points, right? So that's never been seen in the market before like that, right? Other than like the recession and things like that. So it all depends on the market, where the current market is at, right? If there's any major news happening, right? So, and I can't emphasize this enough, but you guys need to literally master one trading session, right? Like you have to just lock in one session, right? And just master it, right? Because if you're going to be jumping from one session to another, you're not going to be consistent. You're going to be all over the place. You're going to have random results because Asia session is chopping. Then London is making some fake highs and fake lows or whatever. And then you get taken out by the New York session because that's where most of the volatility is at. So things like that. So master one session, right? For example, me in my case, I trade AM and PM, right? So I'm looking at the market from anywhere from 9:30. I don't care about what happens in Asia. I don't care about what happens in London. I don't care what happens pre-market, which is from 8 a.m. to 9:30 a.m. Like I don't trade those sessions. Obviously, I look at the sessions, right, to see like where the, where the market is going, where the major highs and lows and all the PD rates are at. Obviously, I look at it, but I don't tend to trade any of these sessions at all because I'm mostly focused on New York AM. That's where most of the traders are, and I highly suggest you guys just focus on the New York AM. That's all you need. and the New York PM, right? But unless, let's say, like if you're working, right, if you have a job, or if you're in school and for some reason you can't trade, even though I'm a college student and I still trade the AM and the PM, right? But I'm not, forcing anything on to anyone. But let's say if you can't trade AM, then you might have to look into other sessions, like maybe the pre-market or London. Asia, I don't recommend trading Asia. It's for the most time very choppy, and you're not gonna really be getting a lot of good results, and it's a lot slower. Like Asia is very slow. Like London is a little faster, but it's still a lot slower compared to New York AM. For example, New York AM, you'll be hitting your targets, a lot quicker compared to Asia and London, because Asia and London, not a lot of traders are present in the market. There's not a lot of big buyers and big sellers that are currently moving the market. So it's gonna take a lot more time for you to hit your take profits and things like that. And you guys gotta understand, in trading, the less time spent on the screen is actually more beneficial for you. That means you're gonna get more better and consistent results the less time you spend on the charts, which again might sound very controversial, being like, well, I have to look at the charts 24/7. I have to see, like, well, if my strategy works like 70% of the time, let's say, right, that means I could catch the trading, I could catch trades in Asia, London, New York, pre-market and things like that. No, because every trading strategy has its own session where it works the best, right? So for example, my strategy works the best in the AM and the PM, right? And not so much in Asia and London. It's not that it doesn't work in there, right? It still works, but it's not as consistent as it is in AM. So that's what I said. You guys have to pick one session, right? And just master that. Master your strategy during that time frame, and you'll get a lot better consistent results. A lot of the best traders out there in the world, they take 1 to 2 trades at most, and they're done for the day. They master one session. They just look at that one session, take the least amounts of trades possible, and that's how they're consistent to it, right? So do not think that the more screen time, the better. In fact, it's a very opposite correlation in trading, right? The less time that you spend on the screen and looking at charts, the more better results than you get. Now, you also have to understand the correlation between the sessions, right? So let's say if you have like a thousand, or I don't know, like hundreds and hundreds of points moves in Asia session, can follow up with a London session. Same thing. There's a lot of volatility. There's a lot of volume in the market for some specific reason, maybe the news or something like that. You would typically expect for the New York session to be a lot more choppier, because most of the volume was already spent in the previous sessions, right? Because the market isn't just going to be volatile Asia, London, New York pre-market, New York AM, New York PM. Like, it doesn't happen like that. It happens in stages, right? First it kind of consolidates, then the market manipulates to some levels, right? And then it distributes, and then things like that, right? So you're not going to be just constantly, having lots of volume in every single session, or it's not going to be choppy in every single session, right? So, if, for example, New York AM, right, if New York AM had like a very clean price action, right, it took a lot of the highs, it took a lot of the lows, it took out major resistance, liquidity, all the types of things that you might have been targeting, it already got taken out in the AM. You would typically expect the New York PM to be choppier, because all the targets would get, like, they already hit, all the liquidity was taken, right? It's not that all of the liquidity was taken, but the majority of the levels, the highs and the very important highs and lows and other PDs were already like targeted and already hit. So you're gonna expect some kind of choppiness in PM. So same thing, right? If London is very, very extremely volatile, there's a lot of volume in the market, most likely AM might chop a little bit, and then PM might clear up, right? So these things just come with screen time, right? And you just have to be aware of like what our previous session is doing. It's not that I'm saying master one session, that means you just don't look at these sessions. No, you have to look at these sessions. Like for pre-market, let's say if you're doing your market plans for the New York Stock Exchange Open, you obviously have to look at what happened in Asia, what happened in London. Do we take out important highs? Do we take out important lows? Was there any like high, previous day low, previous day high taken, things like that, So obviously pay attention to what happened previous sessions, but it doesn't mean that you just have to spend the whole entire session just watching and potentially looking for trades. All right, so let's just take a quick look at a few of the examples, right? So what are these lines that I have on the screen? Like these different colors is my session, right? So just an indicator kind of showing the colors of each session, right? So from 6 p.m. to 12 a.m. right here is Asia, right? Which is this orangey looking brown colors. And then London is from 12 to 6. And then these two are just pre-market, right? These are not New York stock. It's not a New York session right here, but I don't really have the New York session marked out, because that's usually what I trade. But just looking at the examples, right? So what happens, right? So like you guys could see, right? Like, although we were moving quite a while, right? Like with the market tariff news and stuff like that, but still, this is Asia session, right? You guys could see we're not really doing much, just kind of doing whatever. Same thing with London happens, we kind of go up a little bit, and then nothing really happens, and then boom, we get like this big dump, right? What happens as New York Stock Exchange opens, right, at 9:30 over here, right, at 9 o'clock, 9:30, boom, we are making crazy moves, right? So what happens the next day, for example, right? Same exact thing, right? This is Asia session, right? This orangey brownie border, right? Not really much. We're just kind of like, a lot of wicks happening and things like that. What happens in London? Again, just chopping around, really. Not really taking out any major highs and major lows. Nothing really happens. And then, we see these major wicks in New York AM session. These things constantly keeps on happening, right? So what do we have here? Again, Asia session choppy, London session choppy, New York kind of starts happening. We start to pick up some volatility, right? We start to come up, take some highs, and then boom, 9:30 opens. Where is it? 9, right? These no market open. Market just dumps. Like, do you see the difference between the candles, right? Asia session, London session choppy. As the pre-market starts hitting, we kind of start to see some kind of a manipulation, right? Which is probably manipulated into these highs, right? And then we see the distribution lower, boom. Same thing next day. I'm literally just going from day to day. Like, this is literally happening every single day, right? What happens? Asia session, not really moving much, right? Just kind of messing around. London session takes out this low, right? And then we kind of come up, take out the high, come back lower. Not really doing much, right? What happens? AM, New York AM session opens up, 9:30 right here, and we just take off. Like, you guys see what I mean? And these lines right here, right, is pretty much just volume. This is volume over here, and as you guys could see, for Asia and London session, the volume is a lot lower compared to when the New York AM and New York PM happens, right? So New York AM was right here, right? And then this is New York PM, right? So as you can see, most of the volume happening in the New York session, right? Same thing in every single other day that we're looking at, right? Not really having a lot of volume, right? Boom, as the New York AM stock exchange opens, we get lots and lots of volume coming in the market. Late the next day, same exact thing. Low volume in Asia and London session, right? New York AM happens, we start making moves. Next day, same exact thing. See how the small candle, like, do you see how small these candles are? Like, we're not really doing anything. We're just kind of moving around between this range, right? And then the moment New York AM happens, then we start taking out premium, very important highs and lows, and making lots of volatility in the market, right? Now, this is just an indicator, right? You could do it yourself and you could, mark it out, but I highly suggest you guys just have some type of indicator to kind of help you out. So I have this session indicator as these lines. I don't know, I just kind of is more cleaner to me, but I know another session indicator. So there's a lot of session indicators, right? Just literally type in session, you could put in this trading session, which is what I have now, right? These little square boxes that have appeared, right? It literally tells you, like, this is Tokyo, this is London, this is New York, right? You guys could see the ranges, could tell you everything, right? Another good one would be Lux Algo, I believe. So just type in sessions and the indicators, and then boom, this is very good. The by Lux Algo, again, it will mark out pretty much everything that you need to know, right? Sydney and Tokyo is Asia. As you guys could see, a lot of the sessions kind of overlap with each other, right? So the Sydney and the Tokyo overlap, and then Asia and London are going to overlap over here, and then London and New York are going to overlap over here, right? This is where you get most of the volume, right, happening in the market. And yeah, this is literally this indicator. I would highly suggest you either use the Lux Algo or use my session indicator, the one that I use. The reason why I like mine is, I don't know, I just don't like these boxes on my screen. I rather just have these plain colors kind of indicating where the sessions are, and I don't really need New York session marked out for me because I traded that session. So but yeah, Lux Algo or the indicator that I'm using. So whatever you guys are comfortable with using, just go ahead and use that. This is a very helpful tool to show you what is happening in the sessions, where the sessions are, so you don't have to like manually look at the clock and be like, okay, where's Asia, where's London? Like me just looking at by these colors, okay, this range Asia, this range London, and then this is pre-market, so I could easily tell where the Asia and Londons are, right? And yeah, but yeah, that's about it for this video. Quick and simple, right? This might seem like, not a very educational lesson, but it's actually very important to just know when to trade, right? So pay attention to that, and yeah, I will see you guys in the next video.